Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions and form your own financial conclusions and make your own financial decisions. Today is Wednesday, January 26, 2022, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow blockhead trader Viper XL 007, and we are going to take a look back at a couple of recent trades. First trade we're going to take a look back is a Peloton trade that I began making on New Year's Eve and one of the half days of the market. And then we're going to revisit one of the futures trades that I talked Viper into making just a few episodes ago. But before we hop to that, I want to give a shout out to our Discord, link in the description below. You can hop in there. It's free to join. You can chat with myself, Viper, a few other traders. We'd love to hear from you. Love to hear what you're trading. Love to hear what you'd like to learn. And we'll make some content for you. But let's get to this week's episode content of looking back at a few trades that we made. Viper, I really thought that today or this episode, we could take a look to the equities market because we spent some time in crypto land and learned about things, and that was all good. But the markets are really pretty wild these days. Just massive moves in indexes down day after day after day. It just feels like relentless daily red candles. And I don't know. Do you have any thoughts on what you're seeing? Are you trading this much?
Yeah, I mean, kind of like I mentioned on previous episodes, I've pulled back my equities strategies into some more long-term hold positions while navigating the crypto world, because what I did quickly find was it's really hard to be really engaged in both worlds at the same time. And that is even more so true right now, because obviously everything you just said that's happening in equities land is happening in crypto land. So red is the color of all the days. So I have been trading lightly in equities, like you said, the Peloton thing, the RTY thing that we're covering here today. But other than that, it's mostly long-term holding and being fairly underwater on those long-term holds, but that's why they're long-term holds. That's why I set them up, because, you know, it was, I wouldn't, certainly not going to say called it, but we've talked about, you know, market being overbought and kind of feeling some tensions. And then obviously with the continuation of inflation and things like that, I tried to scale back my advantageousness, my aggressiveness on speculation, and I'm trying to reel into some safer long-term plays to weather the storm, because I don't want to weather the storm by just straight up getting out unless that makes sense. But I'm mostly hunkered down, we'll call it, and then taking a couple opportunistic things like what we're about to embark on today.
One of the things that I'm kind of kicking myself for, and I'll mention it here, we did an episode on hedging, and I had put a beautiful hedge in place in December. I financed it in December. This is the hedge where it's we bought a vertical put and then financed that vertical put by selling a short put. And so I had this wonderful hedge that was going to insure me up to $10,000 in hit to my portfolio all the way through the end of February. And I let the market pump fake me out. You know, we went into the hedge. My hedge started making money. We started to kind of rebound out of that. And I thought, well, maybe this was not the big one that I was kind of thinking of. And rather than just saying that hedge is free, just let it sit, let it be. It's there. It's not there to make you money. I got greedy and I closed it out to try to pick up a few K, and I got whacked here in the past couple of days. So I want to take you back in time, because on New Year's Eve of 2021, I went out with my family. We kind of enjoying the holidays, time off from school, time off from work, and the markets were open that day. And I said, let's just look for a couple of bargains or something to sell. Just one trade. I want to put one trade on. And we actually did an episode on this. I put on a trade of Peloton, and in all of the recent market downslide, I started getting a lot of buying power pressure put on me. And so I want to go back and revisit that Peloton trade to see, hey, how did that fare for you? How did that pan out? So let's hop here to a chart. And this is where I opened the Peloton trade on New Year's Eve. And I had opened the strike price here at the $30. So I opened two $30 puts on Peloton, which I collected $2.15 for each of those premiums, which here's my break-even price. And then I had a bailout price of 2 times the credit received. And everything was going pretty decent for me as we kind of progress on. And then on January 20th, this monster red candle of a 24% drop hit Peloton. And there were some rumors out there swirling that they were going to halt all production and they weren't going to make anything out of the factories. People were saying this is the end of the line. Peloton is going belly up. They can't, no one wants their demand. It was just a massive day. The stock was actually halted 3 times that day. And it happened just as I sat down for lunch. I kick on a couple of the financial news and I hear this breaking news, Peloton shares halted. And I'm like, Peloton shares halted, what's going on? And then I pull it up and I'm like, oh boy. But I mean, look at the chart here. And this is kind of the power of the premium selling and the buffer that I had where, my bailout price of where it's time to turn tail and run was all the way down here at 25.77. So we broke through that day and I was really on the verge of, well, this hit my break even. I need to get out. But the one thing that was kind of nagging at me was this was a rumor, first of all. Second of all, it was extremely reactive. Like there was just this pent up people looking for bad news, wanting to just hammer this thing. And I said, well, I already take a hit this big. And the volatility went sky high. I mean, just sky high. So I said, well, I'm going to hang on to this thing for the rest of the trading day. And let's see how it goes after hours. Let's see how it opens tomorrow. At a very least, some of this volatility might come in a little bit. And maybe I won't have to pay up so much to close it. And I guess you could say I got lucky, but hey, stocks are a coin flip. So I got a 50% shot. And we actually rebounded the following day and then a big monster green candle the following day after that. At the same time, this was where the general market was just dropping 1%, 1.5%, 2%. I mean, just getting hammered day after day. And my account was really getting smashed with buying power demands. And I needed to cut some of the sandbags loose and free up some buying power. And this trade had already breached my strike down here. And I said, look, this already hit my signal. This is something's wrong. It was massive news. Nothing in my trade ever anticipated something like that. So I bailed out on the 24th of January. And I just kind of summarized where I landed with all of this right here in this chart. I opened the 30 Delta put at 215. I did 2 of those things. We had the major event 3 times halted on the 20th. It breached my bailout on the 20th. I hung in there just a few more days as it kind of started that elastic kind of pullback, snapback. I cut the rope at that point. I had to pay $5.30 to close that out, which means I lost $3.15 on each of those contracts. And, as you saw in the chart, Peloton continued to slide after that kind of peak rebound. So it's a loser for me. I didn't book a gain on this one. I feel pretty decent that at least I got out at an appropriate time. I was kind of okay going long Peloton and even at the 30 put because volatility was so high. I was planning on turning around and selling calls against it. But with all the buying power pressure on my account, it had to go. So Viper, I remember texting you on the day that I'm sitting there eating lunch, watching Peloton go down like 30% at the time. And I said, hey, you want to know a good IV stock right now? Peloton's got some pretty high IV.
Yeah, it was. We'll call it a classic case of Schadenfreude or something to that effect, where I had nothing on my radar at that time. You did text me in a mild, not quite panic, but like, holy crap, this is happening. I jumped onto the chart, towards the bottom here, but I was looking at it and, small spoiler of the next ticker we're going to talk about with RTY. Like I had just wrapped up the play there, and I, was just not looking for any plays, was not looking for anything, empathized with what a major loser feels like. And then I just kind of sat here and looked at it, and I saw a couple things that I was like, you know what? Like, there's an opportunity here when you're just coming into the train wreck as all the cars are piling up on each other. The first thing was this massive wick here on the actual crash, because major stock moves have an elasticity to them, or so it seems, where you have a move one direction and then there's going to be some level of a bounce, and this is where you get risky and coin flip and all that kind of stuff. You don't know when or how or what the bounce is going to look like, but then there's a little just like a rock on a rubber band or something like that. And so when I saw this massive wick here, at least to me in the moment, that kind of signifies we just hit a ton of trigger, limit buys, whatever, something just there's your bounce. And it kind of cooled back off again. But then we started climbing back up, and I don't remember exactly where, but I want to say it was somewhere right in this area around this candle that I was like, you know what? Things are looking up and I'm in. But I want to be very careful, because nothing's more intimidating than staring at a lava cliff here and then deciding to naked sell a put. So I looked at the Greeks, and 20 put really was looking pretty solid to me. It was around 25. We'll call it 25 delta. Like Sprocket says, the IV was off the chart. I want to say 185%, something like that when I did this. All the stars align for what we talk about when we're looking for juicy puts to burn off volatility. So I entered it there, and then as we can see, obviously we got that bounce up. I was looking super pretty up here. Wanted to give it another day or two to see what happened. We started coming back down, and then this little pancake action right here was today of this recording, and I was like, you know what? I'm not feeling it anymore. Let's just wrap it up, get out of here. There's a couple things to note here. One, the power of burning off that volatility. Where I bought or where I sold the put and where I bought it back, within $1 of each other. However, I scored 50% of my profits that I collected on the initial put sell. It was like 47, 48%, something like that. I kind of struck on all the right chords to make a solid little gainer out of this.
Oh, for sure. I actually just checked the charts on the volatility, and that specific one, you're probably right. It was probably around 170% because the stock had a volatility of about 150%. And just in those 3-4 days after that big red cliff, the volatility fell off down to 100. I mean, it's still high, about 120% now, 100 115%. So that IV crush is huge. When you talk about options and you get these options where the volatility is high, there's a lot of premium in there. And that's a thing to remember if you're even thinking about buying options when you want to shoot for the moon on something, right? When the IV is high, you're paying a lot of premium. And if that volatility comes in just even a little bit, so this went from 150 to 125%, 120%, and Viper got 50% of the premium that he sold back. The volatility crush is a very, very, very valuable thing, and it can be awesome. Way to go, Viper.
Yeah.
So Viper, let's talk about RTY. Let's talk about the futures play. I hyped up all these futures. We made a futures play, and the market said, "Yeah, I'm just done."
Yeah.
So,
I mean, I even told you, I am none surprised how this went because I touched it. So yeah, let's jump over here and take a look at what we saw that, as a little flashback to what we saw as the setup. We did do this on an episode. This was my big entry into futures options on an index. And I think in the episode, our longtime viewers will know if I'm correct in this or not, but I think we talked more about the S&P than we did the RTY in that episode. And I think we maybe brought it up in the episode, brought up the Russell, but the focus of the episode was on the S&P. And what happened then is whether it was during the episode or afterwards, I looked here at the Russell and I was like, whoa, this looks way better. The S&P, you have a pretty typical running chart. What we're looking at right now is the entire duration of 2021. And this is just made for options. If you see any chart like this is, what solid options dreams are made of. And the whole point being, we can see here on the bottom line here around the 2130, we see just impressively consistent support, that it comes down, it bounces. We've talked about this before. The indexes are so liquid that you just get really crisply defined price levels. And this is the quintessential example of that. And then we'd bounce up here. And, talking to Sprocket, like throughout 2021, he made plenty of good moves on both directions on this bounce here. So as soon as I saw this, I was convinced, like, yep, this is where I'm going to make my entry. Again, foreshadowing in the back of my mind was, I'm about to touch this. It's going to wreck. But nonetheless, what we're looking at here was the setup. And we opened up for 1970 as the put. And so I don't have that currently marked, but it's right down around here. Reason being for that was, as we're testing this support that held all year, we're looking, it was also driven by the Delta, the decision to go 1970, but we kind of have this little chop here, which I don't want to get there. That was playing way too close to being in the money. And then down here, we have this other little chop zone and a potential price level around 1950-ish to resistance at 2010. So right in there, 1970 was looking really good, met all the criteria on the Greeks and met some price action. So that's what we were looking at. And we opened up, charted here, and obviously, hello, that looks familiar. So we opened it right here. If we zoom in, I marked this exactly where I opened it and sold that 1970 for 30.10. Right after we sold this, we got a really nice pump up. This wick goes all the way up to 22.10, 22.15, somewhere around there. Way in the money. Way in the profits. And it was a good feeling. I think it even surprised you, Sprocket, that
I remember telling you, I'm like, hey, we don't normally get to winning this fast. And we weren't quite at the 50% target. I think I was at like 45% profit or something like that. It wasn't quite there. And I was like, man, this was a heck of a first go for you, because I usually have to wait a few days, maybe a week or so before you really get up to these numbers. We really must have nailed this thing with that expected support at 2130.
Yeah, exactly. And I almost did jump out, because we weren't quite at the official, like not even official, but just for the strategies we've talked about, we weren't quite at 40% or whatever, but it was really close. And then again, so here was a little touch of those emotions settling in, that the hardest trade to make is when to get out. And I'm not regretting anything, but that was decent profits. But what was going through my mind was, we called the bottom perfect, and more importantly, thinking out loud of what set me up into this play was that consistent level there. So everything was confirmation bias kicking in of like, we got the bounce off that level. I mean, look at look at that, like that green line, like boom, nailed it. And then we started coming back up, even though we opened back here, we came down, tink, and then we started working our way back up. So confirmation bias was in full effect, and that was part of why I didn't close out in profit. And then things started getting questionable as we go on in time here. We come back down and we dip a little bit below, and now things aren't looking as rosy, because like, hey, wait a second, we weren't supposed to retest this. We were supposed to get our support and go. And then we don't even clear previous highs, and we come back down and hit it again. And now we're both, losing money. All those profits have evaporated. And then thump, we actually start dripping down, and now we've completely broken it. And again, not a panic, but now for me personally, we're entering the realm of, this is not the play that I was interested in. I mean, and not to say that of like, I only bet on winners, but specifically not the play I was interested in, because 2130 was supposed to hold. My entire play was predicated on the fact that 2130 held. And even though I set the target for selling 1970 because I thought that could hold, emotions kicking in, and I don't want to stand around and test that. So my exit strategy became clear, and I said, you know what? Next time we get a bounce, I'm going to see what my buyback is going to look like, and we're just going to wrap this thing up. We pushed down, we came back up, and it was somewhere around in here that I was like, you know what? At one point, I was completely flipped, and I was down 35-40%. And I even texted Sprocket at one point of like, I would do anything to be break even right now. And so lo and behold, this bounce here, I checked, literally was break even. And there is a brief flash of emotions that say, no, this is it. It's finally coming back. And I was like, no, remember what I just said. I would do anything to break even right now. This is now straying outside of the parameters that I kind of put on this. Walk away. So I bought it back exactly for 30.10. So I walked away, having paid some commission fees. And that was the end of it, because I didn't like what was happening. Price action tells me this is going to keep going down. I don't want to stick around and find out where down is. That is a drop in price of 3.7% ish. And yet I still broke even. I feel like our plays kind of diverged. So where are you at on this?
Yeah, I'm pretty red, a lot redder than you were. I mean, go me when it comes to futures and hitting some of these red trades. This thing just keeps sliding. We started forming a nice bottoming a little bit earlier this week. Like I said, I love to play the indexes because you usually do not see massive moves. It's a risk that's always out there. I entered the exact same time as Viper, almost at the exact same strikes. I think he came a little bit later than me. He got a little bit better pricing because the index was falling that particular day. My break even is 1950. So, or 1944. So we're below that. And I think my bailout is around 1888. But yeah, it's not going well for me.
Now that I'm not in anything, this is an attractive moment to take a deeper look at a play here, and see how far away I can go to stay, out of massive trouble, and keep the options open to maybe break even if we do tumble through this. Because again, this is the power of volatility crushing.
Volatility is almost at 40%. And if you remember from the futures episode, I like selling premium normal conditions above 20%. 30% is pretty much a no-brainer. Take the 16 delta put, just throw it in there and hopefully you get that volatility kind of contraction that you experienced on Peloton. We're approaching 40% on the Russell right now. That's pretty good volatility for an index. So I know it looks red. I know it's dark before the dawn, but man, I wish I could enter now and not just be hanging on by a thread.
Now that it's up to 40%, because it was around 29% when we opened this play. That's pretty attractive, like you said. So we'll see. Stay tuned.
Yeah. The one comment that I do want to make when you were talking, you might be thinking, well, why on earth did you have this thesis of 2130 and you open at 1970? And then just now, when you're talking, hey, I'm going to look in here and I'm going to see how far away I can go. How far away can I stay? That 16 delta, that 20 delta. The reason that that we trade that far away from the strike price is specifically on how the theta decays and the premium decays. So it's kind of an exponentially speeding up curve the farther away from the money you are. You have a different theta decay curve the closer to the money that you are, the closer to the strike you get. And you'll get a faster burn off of the premium the farther away you are. And so the reason we put that strike out there, one, it keeps us safer. It gives us a higher probability of profit, but it also lets you cycle the trade faster because the theta at the 5 delta, the 10 delta, the 20 delta is going to come off a heck of a lot faster in that final stretch of the window we like to sell in, which is the 30 to 45 days to expiration window. And so, that's why Viper is going to be looking really far out, one, to be safe so he never has to worry. Futures can have a lot of buying power expansion. They are very large products. So you have to be cognizant of that. But it's also the farther away you are, the faster that theta comes off, the faster you ring the register, the faster you get to recycle that capital and try to compound those gains. Well, that brings us to the end of this week's episode. Like I said, we will show you the good, the bad, and the ugly. And Peloton, not a pretty one for me. It was a great one for Viper, so good job on you. The RTY trade for Viper, not a winner, not a loser. It's a scratch. The whole point in that trade was to get Viper comfortable with futures, feel how it reacts, understand it. I'm actually very glad he got out when he did, because right now I'm in a world of pain. It is not nice, but it's a pain that I've been in. If you go back to previous episodes, the soy disaster, things like that. I don't want to make you think I'm always in pain. I've had some amazing futures wins. I think if you go back to the review of 2021 trading, my biggest gain was options on the NASDAQ. So I book wonderful gains, but I just think the internet doesn't show people a lot of those pain points and the real trades that happen. And that's what we're about. We'll show you exactly what we're doing. We'll talk about it. Right, wrong, or indifferent, good, bad, or ugly. It is what it is. A lot of volatility out there, guys. A lot of action in the stock market. Be careful on your trades. Think them through. A lot of premium to cash in on. So good luck out there. And remember, think outside the block.